and then you just start talking. But if you want to pause it, if you get lost or anything...
Yeah. Welcome to the first of 3 education sessions on the Trade Journal. In part 1 today, we're going to go through the Trade Journal, the functions of the Trade Journal, setting up the Trade Journal, and we'll go through each of the tabs on the Trade Journal. Following sessions will cover in more detail the pages on there. The next one will go through the reward to risk calculator and the position sizing page on there, and the last one will go through the reward to risk journey, I guess, right through the entering in the Trade Journal page, going through the portfolio management page, and ending up with the equity curve and the journal summary page, which records all the closed trades on there. First of all, the disclaimer: the content of this presentation or any other Elite Traders Club materials does not constitute a recommendation, nor does it take into account your investment objectives, financial situation or particular needs. But before making any investing decisions based on the general advice presented in any of the following presentations, you must consider whether the advice is appropriate in light of your financial circumstances or seek further advice. You can pause and read the rest of that one, and we'll move on to today's agenda. Introduction to the journal, going through each of the tabs and setting up the journal summary there for you. So let's have a look at the Trade Journal. When you open up the Trade Journal, you might have a little button at the top that asks you to enable the macros or enable content. Once you've clicked on those, it will probably open up on the disclaimer page on there. We'll just go through the pages on here quickly for you. The journal summary page lists all closed trades on here, so nothing will happen on here until we get to the closed part of the trades. Reward to risk calculator does some calculations. We'll cover that in detail in the next webinar on there. Position sizing calculator goes through the process of telling you how many shares you can trade within the strictures of your trading plan. Trade Journal page is just purely a Trade Journal page on there. That's all that does, just records the trades. The portfolio management page tells us the dollar VAR, dollar value at risk on here, and how much you have available to you in the current market strictures on there. And the last page is our equity curve, which at the moment is 0 on there. So let's go through how to set this up on here. Most information for setting up comes from your trading plan on there. So the first page to start with is a journal summary page on there, and starting up the top left hand corner is the minimum return. That is your profit target, your long-term profit target, which you will have in your trading plan. The next cell is the maximum drawdown from a starting bank. So we've got a couple of measures here, this cell and the next cell, where if you hit these targets, you go to reduced risk trading on there. And these will vary from person to person, so I've just used average values here. You might have higher or lower numbers depending on your trading plan. So the first one is the maximum drawdown from the starting bank. What this means is we've got a starting trade balance here of $50,000. If we lose 10% of that immediately, $5,000, we start going into reduced risk trading. I'm going to cover this in more detail in the third lecture, because this gets complicated, because it does come into using the equity curve as well. These levels or thresholds are used until the equity curve has got 31 closed trades and the 30-period moving average starts working on there, which from that period on will be your threshold for reduced risk trading. So until we get to those 31 closed trades, you use the 10% or whatever your particular percentage is as a maximum drawdown from a starting bank. If you start and you start making profit, which hopefully you do, and then you get a pullback, we give it a bit more leeway on this one. I've got 13.5%, normally around 2/3 of our total limit where we stop trading, which in this case is 20%. once again, you might have different numbers on there. So get these numbers from your trading plan and enter them in there. Reward to risk goal, this is fairly standard. We have a long-term reward to risk of around just over 2%, so 2 to 1 reward to risk, I should say. So 2 to 1 is there. Strike rate 50%, fairly conservative. We hit well over that on there, and that will give you a very high expectancy of 50 cents in the dollar. So for each dollar you invest in the market, you would expect to get your dollar back plus 50 cents on there. Starting trade balance, this will be altered as you add and withdraw funds from your trading account. So you might start with a small amount on there, and small is relative of course, but whatever you start with, if after you've gained competence and confidence you want to add to that, this is where you change the figure, and this will then feed through to the other pages in the trade journal, such as the position sizing calculator and the portfolio management page and the equity curve. The percentage R that you risk per trade, the percentage of risk per trade, it'll be anywhere between 0.1 of 1% and up to a maximum of 2%. Once again, this is on your trading plan, and the last figure you would enter in this section is the dollar VAR limit, which is your absolute threshold. So you've got our preliminary thresholds over here where we go to reduce risk trading. If you get to 20% drawdown, we stop trading and we go back over and have a look and see what happened on there for you, and discover what went wrong, but you do not get past that level. Last column is for financing costs on there. There's two methods of doing this, either aggregated on there, which you just enter in here the values on a weekly or monthly basis, or you can go trade by trade, in which case you would enter this with each trade on the trade journal page. So if I switch across to the trade journal page, on there is a financing costs column way over here on there, and that would be where you would enter the financing costs for each and every trade. If you're using the aggregated method, you do not need to use this column on the trade journal. Back to the journal summary page on there. Now, the rest of the information on here, all these cells are calculated cells, so you cannot edit these, you cannot change these. These will all populate once you start closing trades on there. You can filter them by using these boxes over here. So if you are using several different trading methods on here, you can get results for each of those trading methods on there, and you can do the same for various markets. So you can segregate your results on the whichever markets, Australia market, US market, and if you're trading FX commodities, etc., you can go through that as well. So that's the journal summary page set up. Let's go to the position sizing calculator page. Just a few bits of data on here. Your trading costs, so you will know what they are, hopefully. If you're not sure, go to your broker's website or ring your broker and say, hey, how much do I pay as a base rate to trade Australian shares there? So that might be $19.95 up to a certain amount, and then you might pay a percentage on top of that, and the same for overseas or US shares. You'll pay a base rate, which is a minimum up to a certain amount, and then it's normally a charge of number of cents per share on there. The rest of this information we will cover later on, but that gets your page set up for the position sizing on there. The only other thing you need to do on here is this risk percentage on here. This will be blank when you open up the page, so you just need to type in the number 1 if you're using 1%. If you're using 0.5%, you just type in 0.5, whichever is the appropriate amount. And as you can see, each time I did that, it adjusted the risk amount, which is a calculated cell on here, and also adjusts our position size. All these cells down here are calculated. It adjusts our return on those when we get to those on there. If you're trading overseas shares, you'll also need to put in here the percentage risk per trade in this cell. Now you can change these on the journal summary page. 1% is our overall figure. What some people do like to do when they're starting trading is maybe just have a smaller amount in here. Totally your call on there, so you can edit this amount on here if you wanted to. So that's the position sizing page set up. The next page we set up is the portfolio management page on there. Not much to do on this page. Most of the cells on this page are calculated. So all we're doing on here is just setting up our benchmark index. We're trading Australian shares, so it's the XJO on there. You have a choice of models. We're only using the benchmarking model at the moment. The correlation model, which is what this big triangle is down here, not in use on there. And you should also have the equity curve impact showing as the value at risk model that you're using on here. I'll go through this page in a bit more detail on our tour of the various tabs in a minute. So that's your initial setup. So all you're doing here is just selecting these pages. On the position sizing calculator, you're putting in your trading costs on there. And on the journal summary page, you're putting in the information across the top here. The only other page where you need to put information is, there is some over here, the overnight rates on here for a number of different countries on there, which you use when calculating the finance charges. So most brokers will charge you whatever the country of origin of the security you're trading, the interest rate. So like Australia's current rate is 2%. They will charge a premium on top of that, 2.5%, 3%, whatever it is. That is the rate that will come through in the financing costs when we're calculating those with your position sizing on there. Because your position sizing is a net position sizing. It takes the costs out of that position sizing. Same with all the calculations of profit and losses on here. So let's go back and we'll go through page by page on the different pages on here for you and different tabs. Just one general note on here. You will note that the cells that you can edit are white cells in most cases. The cells that are shaded blue are cells that are calculated on there, and you are not able to click on those or change those. I'm clicking on them now and nothing is happening. Sometimes you'll get an error message depending on the page, but if you just look for white cells and if you fill out all of those, you'll pretty much have your trade journal up and running. Journal summary page is pretty much self-explanatory, quite detailed results here, and they're broken down to quite a different number of different categories on there, but only when you have closed trades will you start to get a result on here. The reward to risk calculator page does some simple calculations for you. Once you've done your shortlist and you are down to the last 2 or 3 or 4 trades or potential trades and you can't decide, what we've been asking you is to put in here, let's say these are the 3 that you're deciding which ones to trade on there. You put in the code, the direction, these are all long trades, the ATR value for this particular security on there, the entry price that we've nominated, and our stop loss price. And what this calculates for you is the reward to risk ratios. First of all, it tells you where your first targets are for 1-to-1 reward to risk, 2-to-1 and 3-to-1. It tells you what the ATR multiplier value is. So if you've just gone through and placed your stop loss below the most recent trough on there, you now know that it's exactly 2 times the ATR value away on there. And it also tells you what percentage is required for the price to reach a 1-to-1 reward to risk, a 2-to-1 reward to risk, and a 3-to-1 reward to risk. And why we're doing this is that if you are comparing these, you can see here that this one requires 8.7% increase in price from 539 to get our first target of 586. The second security only requires 6.4%, and the third one requires 7.3%. So all things being equal, you would choose the security with the lowest percentage increase in price required to meet your target. On that one. Next page is our position sizing calculator on there. We've got this all set up, ready to go. When we start trading, all we're doing on here is selecting the direction of the trade. We've already put in our market risk. We're just putting in two values on here. So this is from, we've decided to trade AZJ on there. Our entry price is 5.39 on there, and our stop distance is 47 cents, not the stop level. The distance between the entry price and the stop loss is 47 cents. Once we've entered that, the values down here tell you how many shares you can get, which in this case is 862, and that your initial dollar value at risk, which needs to be under our $500 1% up here, we're under that with $490 on there. Same for overseas shares. You choose the direction of the trade on there. You've got your risk amount in here, entry price, stop distance in whole cents, no decimal points on there, and this will tell you how many shares you need to use on there. The trade journal page is pretty much just a recording page, recording all the details of your trades. Very helpful if you need to go back and review your progress on there and just see whether you did actually implement your trading plan exactly as you hoped you would on there. Also, if you do start losing money and get to the first of those thresholds on your portfolio balance where you need to go to reduce risk trading, you can send that to us at Elite Wealth, and we can go through this and just make sure you are implementing the plan exactly as per what your plan is, or whether there's some minor deviations there that might be causing you to lose some money on there. But in most cases, just a simple matter of clicking on the square on there, selecting what you want, or typing in the code on there. And a lot of these cells, you can edit these. So this is the makes a lie, the last rule I gave you about white cells are editable. On this page, some of the cells you can edit and some you can't on there. As in this one, if you're not sure, if you hover above the heading on here, what to do, a help box comes up. So if you're not sure what to do in the tick size area, hover over the heading and it tells us that this is the amount of profit and loss per 1 pip movement in price. In this case, we always enter 1, the value 1 on here. And this is the same for all of these on there. There's a help box for each and every one of all of the different cells in here. We've got space for exiting, half exits on here, or full exits on there. Trading commission, financing costs on there. Profit and loss is a calculated cell. Once you've finished trading, that will calculate, as will the reward to risk on there. And as we scroll across, we've got trailing stops on there, so plenty of room there to put in your trailing stops on there. Dividends, and over here, the reason you got out of that trade on there. Next tab is the portfolio management page. One of the most critical pages on here, linked to other pages on there. All you're really doing on this page is just taking note of this. This is your, if you recall from our journal summary page, 20% was our absolute limit that we can go to on here. As you enter trades and have risk on the table, this will take away from this number and tell you what is still available. Once you've got 2 or 5 or 10 open positions, it'll tell you what percentage is available and what dollars are available for you on subsequent trades to risk on there. And the very last page is our equity curve. You won't get values on here until you have closed trades again, and just a matter of clicking on update and you'll get the equity curve on here, hopefully starting bottom left and going top right. The equity curve indicator on there is a 30 period moving average, and therefore will only appear once you have 30 closed trades, 31 closed trades on there. Once that does, that then becomes your threshold for reducing risk. That's your indicator for using that. That's in your trading plans, so you can check on that on there. And then all of these feed back onto the journal summary page on there when we've done that. So that's the end of this first webinar. The next webinar, we will go through a couple of these pages in details, the reward to risk calculator page and the position sizing calculator page. And then the third webinar will go through the trade journal page and the portfolio management page. Thank you.